All right. Good evening, traders, and welcome to tonight's section. So basically, what we'll be doing tonight is Q&A section. Q&A section. So if you can hear me, please let me know in the comment section before we proceed. And if you can see my screen, also let me know so we can start this. All right. Okay. My mic is okay and my screen is up. So let's get straight into business. So basically, just to entertain question, whatever issue you're having, let's just get to discuss it live now. So if you have any question, I'll be making use of the comment section. Let's be very, very active and let's make this section very, very interactive. We don't need to waste any time. We don't need to waste any time. So if you have your question, just start dropping them in the comment section. I'll be attending to them one after the other. One after the other. So let's start. If you have any issue, anything relating to trading you're having issues with, that's why we have this Q&A section tonight. So let's get to look into that. Okay. So Excel said we should explain margin and equity. All right. So now when you're talking about your margin and your equity first, let's start with your equity. Um, now, okay, now let me say something like if you don't have any trade placed, if you don't have any trade placed, you will see that your balance, your equity should be the same. Should be the same. And now, when you get to open a trade, if you open a trade on your MT5 or your MT4, if you open a trade, if you have a if you have a trade running, you will notice your balance will be constant. Then the equity will either be below or above. Now, the balance will only adjust upon closing of the trade. That's it. Then your margin here is like, how will I put it? Well, let's say something like the amount you can actually like, let's say your risk exposure, the amount you can actually lose or something like that. So that's it. I believe that answered you. Next question. Next question. On the last report we did, I think we are all asking questions. So that's why we are having this live section. But also bring those questions you actually filled on the form. Ask them here and we'll get to attend to them. Yeah, now. I think a lot of persons are like they're having issue in one topic or the other. That's why the section is created. Okay, I feel there is no question. That means we've all understood. We can go ahead to maybe end the live stream. Maybe there was no point trying to host this. If a trade mitigates a 4-hour order block, but after refining it to 1 hour, it hasn't mitigated on the 1 hour, does it make the valid for 1 hour entry? Okay, now let's look at this 4 hours explanation. Let me see if I have any example. So let's get to do something on 4 hours and see. I think I can't find any point of interest that happened to. But basically, this is what I do. This is what I do. If I have this as my 4 hours and price returns back to my 4 hours order block this way. Let's say this is the 4 hours order block. Price has returned back to this zone, but I go down to my 1 hour, but price hasn't returned back to that zone. This is what I will do. First, when I have a 4 hour supply zone, it depends on the entry time frame you are trading from though. But when I have a 4 hour demand zone or a 4 hours level, I like refining my trade back to 1 hour zone, because basically most of my trades are being taken on 1 hour or 15 minutes. So based on my own entry time and confirmation, if I refine this chart to 1 hour, let me say after price mitigated this 4 hours and I return back to my 1 hour chart, and on my 1 hour I don't get to see those confirmations I'm looking at for, like having the momentum. Definitely the momentum should be there for me to do market on 4 hours. Maybe there's no the fair value gap is already filled. If the fair value gap is already filled, then I might not trade from that zone again on the 1 hour. But if I still have a fair value gap going down to the 1 hour, let me say, let me get to check something like this. Okay, let me say this. Okay, let's just assume this was like our order block here. And let's say price has already mitigated into this level on the 4 hours. Now, let me use this here, because that is not a perfect example. Okay, so let's say this is our order block. Let's assume this is the order block we are working with here. And on the 4 hours, this was like this zone. On 4 hours, this was like this zone. And let's assume this candle here tapped into it on the 4 hours. Then, based on my refinement, I refined this zone to 1 hour. On 1 hour, this is what I had as my zone. And this price didn't tap into it on 1 hour. And I still have like a fair value gap here. Then I will still want to take that trade. I will still definitely take the trade. I'll still definitely take the trade. Or if I feel like I don't want to, or I feel like there's a reason not to actually take that trade, what I will do is I will want to see, I want to refine my entry this in confirmation to 15 minutes. So what I will wait for is I'll wait for price to come into this level. Let me say this is the level here. So I want this price to come back into this level, then maybe sweep this low, come back to give me a change of character, then I'll continue. Or even if I want to still take it on the 1 hour, even if I want to still take it on the 1 hour, I'll want to see confirmation. I'll still want to see confirmation. I think that is the best way to actually go about it. If price has tapped into the 4 hours and you still have a 4 hours order block still intact, the price has not tapped into, the best thing to do is what? Wait for change of character on the 1 hour. I think that's the best thing to do before you go ahead to take, because don't just take it, because price has already mitigated this level on the 4 hours. And if price is coming down to the 1 hour, there's a high tendency that price can actually break that zone. So to be on the safe side is best you get confirmation. So that's the best thing to actually do. But saying the other block still invalid, or does it make the other block invalid, or you look for entry and the other block is still valid, it's not invalid, because on the 1 hour price has not mitigated the 4 hours other block. It's just like having a 4 hour zone, and you now refine the chart to 15 minutes. Now let's look at this. We have this other block here. We have this other block here. If you refine this other block to 15 minutes, you will have something different. Let's get to see. Okay, I think the 15 minutes is still almost the same thing. It's still the same thing. So, but what you want to do is, since this other block was marked on 15 minutes, if you want to take this trade on 15 minutes, you have to wait for a valid change of character. That's it. So whatever you are marking, you are referring your other block to, you have to get a confirmation on that time frame. I think that's the best way, because if you're waiting for confirmation on 4 hours, a lot of times you can't even get a valid change of character on 4 hours and expect price to return back to that zone. It might actually take like weeks or months, or sometimes a very long period of time. So it's advisable that if you are waiting for 1 hour that block, get a valid confirmation on the 1 hour, or when the price taps into the 1 hour, then refine it to 15 minutes. That's the best way to actually go about it, so that you get to cut down on losses. So that is it. If you check the description of this video, for those that don't have access to the lot size calculation, I still put it in the description of this video. I wasn't home and I just got back late, and that's why you see someone had to address the group. I had to text and I was like, please help me update the group. So for the lot size, from the table, if you check the one in the comment section or in the description, or the one on the WhatsApp group, you will notice I use a fixed lot size, and the fixed lot size I used was 0.01. That's the least lot size you can use on MT4, MT5. That's the least for currency pair, and I think for crypto too. That's it. And it all varies based on the pair you're trading and the amount on your wallet, or should I say on your account. Because if you have some little amount, and depending on when you're creating your accounts, depending on the standard of account you created, because some account can allow you to open some lot sizes too, based on the capital you have. But now coming to the lot size, now I don't know what exactly you want. Because if you are just talking about lot size on just like this GBP JPY, lot size on GBP JPY is different from EU. It's different from EU. Okay, now I think I have a trade here on EU. So this was my trade idea on EU. I didn't take this trade because I don't trade EU, but this was like the trade idea I had on EU. So now let me say this is 18 pips. If you see the stop loss If you see this down part here, it's showing 18.6. Let me just make it a round number. Let me just work with, let me say 19. Let me just say this is like 20 pips. I'm having 20 pips. I have to make this trade like 1:3. So this is a 1:3. The trade has tapped in. So if you have to work with this using 0.01 as a lot size, 0.01 will give you, on this will give you 1.99, or let me just say $2 if this stop loss should hit. Now if this profit should hit, you'll make $6. If you're using a 0.1, a 0.1 lot size, that was like 0.01 times 10. That's what will give you a 0.1. To have one standard lot size, that's 0.1 times 10. That's what will give you a one standard lot. So for this one here, taking this trade with 0.01, this will give you -2 to make $6. Now it now boils down to your account. What is your account size? Do you have $100? Do you have $50? What's your risk parameter? What can you take? What are you willing to risk? If I have an account of $100 and I want to be a very conservative trader on that account, what I will want to do is to risk on this account or on that account. I want to risk a $10. I want to risk a $10. So for me to, let me say I'm taking this trade and I want to risk a $10 on my $100 account, what I will place this trade with is 0.05. If I place this trade with a 0.05, what I will lose on that account, or the loss I will have on that account, is $10. And if I should make profit on that account, if this trade should hit my take profit, what I will make is what? $30. But if I want to risk $20 on this trade, then I will use 0.1. 0.1 will take $20 if this trade should hit SL. Like if this trade should come back and hit this SL, that's $20 gone. If this trade should move from here to take profit, that's $60 made. So basically what I do is I always have a consistent, like a fixed loss on my account. No matter the A+ setup I'm meeting, no matter the kind of setup I have, no matter how short that trade is, I have a fixed loss. If I've told myself this month all I want to be risking on my account is $50 or $100, all the trade I will take throughout that month will be $50 or $100. It's fixed. That's where my own trading is. No matter the pay I'm trading, is fixed. So since I know that my lot size or my loss on or should I say my risks on a particular trade is all fixed. So if I'm taking this one, it's $20. I'm going to risk $20. If I'm trading gold, I have to make sure that whatever I'm setting aligns with me risking just $20. So I can even have a 5 pips. Let me say if I'm working with like a 5 pips, or let me just say 10 pips, 10 pips, 10 pips on this trade. That's what I want to work with. First thing I do is what? I go to my notebook. Or I go to my Excel sheet that I use for my trading. I input these 10 pips on my $100 account. I want to risk $10. Simple. What I will use is 0.1. 0.1 will take $10 from my account. If I want to risk $20, all I need to do is to increase the lot size. 0.2. So basically, from the table below in the comments, in the description of this video, or the one I sent to the group, all you just have to do is what? Study those things. That's why I use a fixed stop loss size, 10 pips. Having a fixed stop loss size of 10 pips on all of the pairs there, and using a constant lot size of 0.01. So if you want to increase your lot size, all you need to do is maybe if you want to risk more than, just do your normal math. Do your normal math on that place. If you want to risk $100 on this trade, all you just need to do is to use one standard lot. One standard lot will take $100 if this trade should hit 10 pips. It's simple. So all you need to do is to, what you want to risk, multiply it by the lot size that I've given on that time, on that layout that was shared. So that's just what you just need to do. And that's how I have to give that layout, so that if you're trading different pairs, you know that 10 pips on EU is not the same thing as 10 pips on GBP, JPY or other pairs. 10 pips here using 0.1, 10 pips on this one will give you $10. On GU, on GBP, JPY or on US, on any of the JPY pairs, 10 pips will be giving you like, let's say $6.5 to $7 using 0.1. So you have to be very, very good in doing your calculations properly. So that is it for the lot size. Joyce said, can you talk a little on stop loss? I don't know what you actually want on the stop loss, but for stop loss is just an amount you're willing to risk on your trade. So for, if it's about drawing of the box or actually positioning your stop loss, now I said, let me get to take this off. I said when you're actually positioning your stop loss has to be below the candle wick of your order block. So this is it. And when you're also positioning your stop loss, you have to make sure that your stop loss is below or above the last candle wick. Because as earlier taught, we said liquidity rests below previous lows or above previous candles high. So if you look at this, that's how you see this stop loss is below this. I don't trade with a very tight stop loss. I don't trade something like this. This is not high. I don't trade this way. I don't. I like setting realistic take profit and realistic stop loss. So for my stop loss, you always find them below the wick. And for my take profit, you always find them before the candle highs. That's how I go about it. Because what? I know that there's a high tendency that this market can come back into this zone and price will retrace to the downside. So I actually want to hit my take profit before price will reverse on me. Now, there's something I didn't actually explain during the classes. When I have a 1:3 in this way and my price has already moved something like 1:1.5, something like this. So if this price is able to push to this high, what will I do? I will move my stop loss to my break even. I move my stop loss. I change my stop loss value to my entry point. So that place I have my entry, I will now use this value, my entry value, as my stop loss. Now, why do I have to break even? I break even so that in case this price should return back to this zone, the market will just hit me out, because I feel like, based on my own back testing, anything that retraces from this 1:5, 1:1.5, it means that the market is going against me. So it should be able to hit me at break even before the price continues to sell down. So for this particular one, if I was on this trade and this trade moves to this high here, I will move my stop loss to break even. That's how I trade, because I'm using 1 hour. If I'm on a 15 minutes, I want to see the price structure. Now, talking about the price structure, there are some cases where I won't just move my break even. If price gets to this high, I will not just move my break even. I have another criteria I want to look at. I want to see price break above it first. I don't know if that makes sense. I want to see price break above this high. So when price breaks above this high, I will now move my stop loss then to my entry price. If this price continues to push to like maybe 1:2, I can now move my stop loss to like 0.5. at least to secure something. And when it moves to like 1:3, if I want to keep holding, I can move my stop loss to like maybe 1:1.5. That's like half of it. So let me say I was trying to make $30 on this trade, and this trade is already giving me like $30. I'll move my stop loss to where I'll be making like $15. So just in case the market reverse on me, you won't get to actually understand this till maybe you start. When you start trading and you keep practicing, then you get to actually understand how to actually make good use of this whole break even. But break even is very, very helpful. It's very, very helpful for at least for you to secure some things, at least secure something for yourself. You don't end up making profit and everything still goes back to stop loss. A lot of persons, they suffer from that. Okay, good evening, sir. Can you briefly explain or give an idea of how I can day trade with this strategy? Because I mostly swing trade since I learn and I don't have the patience to hold trade for long. You don't have patience to hold, but you're swinging. I don't understand. If you are doing swing trading, if you're a swing trader, then it definitely means you're using like 4 hours to 2 to 4 hours for your trading, because that's where you get to swing. If you're trading 1 hour time frame to 15 minutes, you shouldn't be swinging, except maybe the pair you're trading there was no volatility in the markets that day. So if you don't want to be holding trade for long and you say you lack patience, I'll want you mark your order block on 15 minutes or 1 hour, or mark your zone. Just have a clear directional bias. Is the market bullish or bearish? The market is bullish. You get to mark maybe your point of interest like this. So let's say this is our point of interest. If I should use 15 minutes, I don't think this trade has any confirmation for a buy. So let's say this is our point of interest. Price has tapped into this. Let's go down to the 15 minutes. So basically what I would advise you to do is trade lower time frame. So if I want to go in with 15 minutes entry, I want to see price. Okay, I think I have a change of character here. So on the 15 minutes, I have this change of character here, and I have this other block here. I have this other block here. You can see we have the fair value gap. We have our fair value gap there, and we have this liquidity given to us. So if I want to go in with the 15 minutes, this is what my trade setup will look like. Then my stop loss below at this low, I can make it, let me just say it's 7 pips is still okay. Then I target 1:3. So the advantage of this is immediately price taps into this, the trade will just head to your take profit and you're out. But another disadvantage you need to also bear in mind is what price can actually hit this here stop loss, and what price will kind of like give another change of character again on the 15. Price is still within this zone. That's it. I can't tell you to come and start putting your stop loss here. But if you want to do it due to your own back testing, no problem. There are times that I actually take trades on 1 hour order block, and on my 15 minutes, my stop loss will still be at this low. That's if I see that there's a lot of liquidity that price has not taken out, then I'll put my stop loss below this point. That's it, but not at all cases or something. No. If I want to actually put my stop loss at this point, I'll actually want to see that this price had a deeper pullback into this zone. Then putting my stop loss will be like kind of like this particular order block. Now let me say it was formed at this damper, then I'll actually love it. But at this point, no, I will not want it, because price can actually weak me out and reverse. That's why I don't actually what? You don't see me trade smaller time frame on other pairs. I trade smaller time frame more on maybe gold. I prefer it on gold because gold will just tap you, and if it taps instantly, then you take profit. And if it's going to your stop loss, then know that that zone will be violated. Okay, how do you differentiate a liquidity sweep from a trend continuation now? For trend continuation, we call it runoff of liquidity. That's something like, you see, you had a liquidity here, price broke through, and price will continue to, sorry, price breaks through here, and you see the price will continue to the upside or to the downside. That's what happens in continuation. But when we're talking about sweep, sweep is just basically price pulling a little bit below this point, grabbing the liquidity, and the price continues to the upside. So that is either what you call it liquidity sweep or grab, liquidity sweep or grab, liquidity grab. So that is just it. Just like what you have here. Look at an example here. You can see this price was selling to the downside, and at this point, look at this point, price dipped below this point, swept the liquidity, and price continued to the upside. So basically, most of the time you have this is price just trying to reverse to the opposite side. So for price to reverse, price has to just take the liquidity below the what previous lows or previous highs, then price continue in its desired direction. So that's it for continuation or sweep of liquidity. How do I identify the liquidity that most likely to be targeted before the reversal happens? Okay. So when I saw this setup, I knew a lot of persons will be marking this as their order block. Yeah, as their order block. Now, why did they mark it as their order block? They were marking it as their order block because this is where the momentum kicked in. But there was something I said during the classes. That's why it's called smart money. You have to be you have to think ahead of other traders. I think someone actually even sent me this. Was it yesterday or a bit today? And when the person sent it, I was like, no, this zone, no, take it off. This zone will be used as an inducement. This is the right zone you should look for. It doesn't mean this zone cannot also fail. It can still fail, but this was the zone I was actually looking at for, because there was a fair value gap below here that I feel that what price might likely tap into the. Even when I saw this price at this point, it still didn't change my bias that I want to see price come back into this zone. So coming to talk about where is that point you want to see market grab liquidity from before reversing to the upside. So if you look at this point to the downside, first you need to mark your order block, or you need to mark your zones. Where is this price heading to? Is the price bullish or the price is bearish? You need to also know where the price is coming from. So for this particular case, the price is bullish for this particular case. But if you look at it on the 2 hours, even on the 1 hour, the price is bearish from the left hand side. But let's work with just what we have here. The price is bullish. Where is the first liquidity you want to see price take out? This here is a liquidity point. That's one. Where is another one? Knowing fully well that this was an inducement, this too is another liquidity you want to see price. Now, price engineered liquidity for us, and you can see these lows here. That's engineered liquidity, and that's what we want to see. We want to see price take out all of this liquidity, tap into this point, then price continue to the upside. Now, what gives us that confirmation that price will definitely continue to the upside? We want to see a break above this, because anything that breaks above this gives you a value change of character. And having a valid change of character here, this tells you that what if price should pull back down again, we want to still look out for more continuation to the upside, and our premium target is this high. So that's basically how we get to use our liquidity, and we also use it for what? Take profit and stop loss, setting up profit and stop loss. If you look at this one here, we have this liquidity here. So if I'm to actually place this trade here, I will have say, okay, here should be my first take profit, or when price breaks above here, I should be able to move my break even to this point, and when price gets to this point, I should be able to move my stop loss to maybe this level. Just keep trimming my stop loss back to back till price gets to maybe this high here or this high. Anywhere price gets to kick me out, then I'm good to go. So that's basically how you get to use your liquidity, or know where to actually target for liquidity and reversal. Any other question? We had a lot of questions on the sheets, or should I say those that asked the questions, they are not live with us. If no other question, then I feel we've exhausted all we have for tonight. Every other thing I believe is sorted out, or we understand. So I should go ahead to end the live stream because we are done. No question again. So let's say we are done. Are we done? Should we call it a night? And all questions answered. Everything is settled. Let me know in the comment now if we are done. Okay, I think we are done. And me, I think too we are done. I think we are done. So since we are done, I believe maybe if there's any other question, it can always be referred to the comment section below the videos and my inbox too. So thank you once again, and good night everyone.